Last week, we kicked off a series where every Monday I break down a real estate deal that I've done over the years. We will eventually go over every deal that is currently in my portfolio in hopes that you can replicate what I've done successfully and learn from mistakes so that you can avoid them. Today, I've got another one for you, and let's just say it was my first crash course in tenant relations. Let's jump into it.
Welcome to the Saucetown Investor podcast.
So let's talk about where I found this deal and where it's located. First off, this property is located at 1940 Church Street Northeast in beautiful Salem, Oregon. This one, it is a duplex. So there is a 3-bedroom, 1-bath house in the front. It's a really small one, I think 850 square feet. And then in the back, there is it's actually a studio unit. It's considered a duplex. It's detached. You would almost call the building in the back more of an ADU, but the property operates functionally as a duplex with renters in the front and renters in the studio unit, or actually renter, I should say, in the studio unit in the back. The way I found this one, it was found straight off of the MLS, meaning on the open market where anybody could find it. And there's a lesson in that for you guys. There's this idea that the only place that you can find good deals is off market. That's flat out just not true. There are deals to be had on market, particularly if you can find stuff like this, where maybe there's an ADU or some other way to generate income besides just a single family home. And you'll see that as I go through my portfolio each week. I actually own a number of these that have worked out really well because you throw in, and we'll get into what this rents for, but you throw in a little ADU unit. I think this is only 400 square feet, but that thing rents for serious money and really, really boosts your profits. So I found this thing on market and I bought it in May of 2020. Okay. So hit rewind, think about what was going on in May 2020, right? COVID had just hit back in March and nobody was buying real estate. And there's another lesson there for investing in general, but certainly real estate is you generally want to be buying when everyone else is scared. There's less competition. You're going to get better prices. I mean, it's a simple game. There's supply on market and there's less demand for it because all the buyers are on the sideline. Right here in 2025, we're certainly not at COVID levels, but I see some of it in multifamily. There's a lot of people that are frankly scared to buy right now or waiting for something to happen. Guys, by the time everything is perfect, everybody else is going to be buying too, and you're going to pay a premium. I mean, look at 2021 or 2020, early 22, when a house would go on market and it would have 20 offers within 48 hours. If you're buying at that time, you are going to pay a premium. If you're buying when everybody else is scared, you can kind of set your price. So on that note, I bought this for $242,000. And I just bought it right off of the market. Now, the way that I funded this deal, I got a conventional loan, but the way I did it, I actually came out of pocket for $0 total. So if you watched our episode last week or listened to our episode last week, I bought that rental house at 965 East Street back in 2018. So, but as you'll notice on the dates here, I didn't buy another deal for over about 2 years after that. And the value of the other property went up. So I was able to pull money out of that to use it to buy this property at 1940 Church Street. So I bought this with all bank money. I didn't spend a single dime on the acquisition of this property. And that's, I mean, for you guys, I always tell your first deal is the hardest one. Okay. And you'll hear people talk about you want to start getting more pieces on the chessboard. And that's what this means. You slowly start building a portfolio. All of a sudden you have more pieces to play with. I mean, you see people that are buying these big multi-million-dollar buildings and stuff like that. They're not doing that out of pocket usually. They're either structuring it creatively or they're just pulling money out of another property that they own that has gone up in value. So get that first deal under your belt. This one was my second. Okay. When I bought it, as I mentioned, the value, my purchase price was $242,000. Today, this thing's worth about $380,000. And one of the best parts of it is I locked in I think 3.5% 30-year mortgage. And that's massive. I mean, you'll see people right now who a 30-year mortgage at that rate is gold. You'll see people who locked in low mortgage rates back in 2020, but they were on 5-year balloons or 4-year balloons, whatever, but they're on short-term balloons. Hey guys, we're taking a quick break, but before we get back into it, if you're enjoying this episode, make sure to like, share, and subscribe. It really helps us to keep bringing you more valuable content. And if you're on Apple Podcasts or Spotify, don't forget to leave a review. Please, it makes a huge difference. All right, let's get back to it. For those who don't know what that means, a balloon just means your mortgage comes due at a particular date. So a 5-year balloon means you either have to sell or refi within 5 years and pay the bank back on that loan. When you lock in 30 years, I mean, odds are I won't own this for 30 years, but it buys you a lot of time to decide when you want to sell. We never want to be what's called a forced seller, and that's what can happen if your loan balloons at the wrong time. You're forced to try to get out of that asset. When you've got a 30-year loan, you've got all kinds of time to figure out what to do with the property. These days, I don't get 30 years anymore. It's too hard as an investor who's doing this full time. But people that are buying properties under your like FHA or a Fannie Freddie, government backed type loan, you can get these 30-year loans. Granted, they're going to be at 6.5%, not 3. But even now, I try to, whenever I can, to lock in as long as possible. I try to get 10-year balloon or at least 7. So when I first bought this, the building in the front rented for $1,500. The house in the front was $1,500. I inherited a tenant in the back, way below market. He was paying $600. So the principal, interest, taxes, and insurance (PITI) on this about $1,700. Front building rents for $1,500, back is $600. That's $2,100. You got $400 in cash flow there, right? $2,100 in rents, $17 in PITI. Now there's repairs and stuff like that. So this is a borderline. You account for that stuff. This is a borderline break-even property when I first bought it. Okay. Today, the front rents for $1,900 and the back rents for $1,100. So that is $3,000. Do the quick math. And the PITI has stayed the same. So the cash flow is $1,200 now. Excuse me, the front rent's for $1,950, back rent's for $1,100. So do the math. Okay, $3,050, a little bit off there. But you get the point. Yeah. PITI has stayed exactly the same, but my rents have gone up. Again, I talked about this last week. Most deals you buy, almost all deals, are not going to be home runs on day one. You have to think big picture with this. And we're about 5 years in on this property. It's making really, really good cash flow every month. So don't get in this headspace where you have to find a home run deal day one, because you're not going to find it. And that's going to prevent you from even getting started if you're looking for the perfect deal, because it's not out there. The important thing is that you buy one, and long term, you're going to do really well. One thing, this property, so that 965 E Street, it frankly has always run really smoothly. This property, the second one I purchased, this was my first kind of crash course in tenant stuff. This guy I inherited, and that's something you guys should keep in mind. Anytime you're inheriting tenants, there's a decent chance there might be issues. People are usually selling a property for a reason. It's not always because the tenants are rough, but sometimes it is. So keep that in mind. You can get stuff when you're buying a property. Once you open escrow, you can request rent records and things like that. Find out if somebody's not paying on time. You can even look at tenant screening stuff to make sure you're not inheriting a tenant with really poor credit or something like that. So you can check on all of that stuff. I didn't know any of this at the time. This was the second deal I bought. So that's a little tidbit for you guys that hopefully you can apply when you start buying deals. But this guy, he wasn't paying rent. He smoked like crazy in the property. He left it trashed. I finally had to evict him. Thankfully, he left of his own accord before the sheriff had to show up. But we got him out of there. He wasn't a bad guy, but guys, if somebody's destroying your property and not paying rent, it's okay to have a heart, but we're not running charities here. It's not your job to fix it for them. So got him out of the property. And we actually quickly raised rent to about, I think, almost immediately to $1,000. And now that same guy is renting for me today, and he's an outstanding renter. Same thing happened to the front unit. I moved someone in without really screening them very hard. She was really nice, all that good stuff. And she usually paid rent on time, all that. And then when she left, I found out she had dogs in the property that I didn't know about. She let them run rampant, all kinds of drywall, destruction, all kinds of issues. And I got stiffed on that because, guys, one thing I'll tell you is the odds of collecting from someone on damages to your house are very low. So screen your tenants well up front. In Oregon, once a tenant moves in, they kind of own your life. The best thing you can do to prevent tenant problems is to get ahead of them. Don't let them ever happen to begin with. And the way you do that is by screening properly. Credit checks, background checks, rental references, income. That's it. People's past behavior is generally indicative of their future behavior. So anyway, that is the roundup on this one. 1940 Church Street. It has not always been smooth, but this was, and it continues to be, a really good deal and a really good piece of our portfolio. That is a wrap for today's episode. Thanks for tuning in to the Saucetown Investor. If you got value from this, drop us a comment and let us know your thoughts. Did you have a big takeaway? Is there a topic you want to see us cover next time? Is there a guest you want to see interviewed? DMs are open. Business is at Saucetown Properties, and my personal, you can DM me personally, is at The Real Matt Cox 4. We'd also like to ask you kindly to please like and subscribe. You can also follow along with the Saucetown Investor blog. That's mattcox444.substack.com. Thanks again, guys, and until next time, keep investing and stay saucy, Saucetown.